All right, good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for August 29th, 2021. It's Sunday night, so we are recording trade frames. So let's see what we got here. And many thanks to Ken H. once again for a great set of charts to work with. All right, starting off with Alcoa. So we have the weekly, daily, and hourly setups here. That's a best practice, by the way. All right, so we have a COTA 2 on the weekly with a generally uptrending Bollinger Band mean. We had the peak of the RL10 here, and that was eclipsed here, and so we're off and running. And if we look, we would notice this kind of almost like a mini COTA 2. On the daily, you can see that is a clear COTA 2 where you have rising lows in the RL10 and in the Dragon. The Dragon is just starting to put that move in. I want you to notice the winter, spring, summer. So that makes this entry around 36 was a perfect SSC where you had the sell-off into the winter that turns to spring, the PSAR flip. So an entry right around here. And you got to move from 36 to 46. That's plus $10 on 36. That's about a 28% gain to the peak. The sell-off came all the way back to 38, but has held support at the Bollinger Band mean. Got to the peak of the river, pulled back, and now had a really strong move on the news of the infrastructure bill on Friday. So that's what Friday's price action looks like. Very positive, leaving behind this consolidation zone and really putting the resistance at 45.5 at risk. So this is a great continuation entry right here. And if it gets through this, you could see how you'd want to have two. And then if it can break above the previous Z3 pinch at 46.75, then you're good to have three positions. I like the short below 41.50 with the idea being that it's going to come down and test the Z3 and then the Dragon and then let's clean that up a little bit. And then the RL10 bottom right there. But this one, along with the whole metals sector, which was great this week, and that should continue to do well. Okay, still learning how to use the annotate button on this. All right, that's what I want. All right, next up is Goldman. And again, weekly, daily, hourly. Such a strong move in the financials with a nice orderly pullback to the PSAR and the bottom of the Dragon, then a COTA 2 re-entry at about 380, and now this thing is pushing 420. You know, that's a nice 5% bump just from there to here on this little move. And then this little weekly pullback was hardly even noticeable. On the daily, it gives you a very strong COTA 2 entry last Wednesday around 410. And now we're poised at 420 for all-time highs. And I like all of those as ways to enter additional positions. I'd be tempted to put two entries on this one because of the strength of that move and the recovery. On the hourly, you can just see here's the gap and go. Here's where the Z3 line, which had been strong statistical resistance, that has been left behind with this move from Friday. So getting a second position here, or getting your first position on, I should say, is good there. And then a second position here at 426 would be excellent. I couldn't see the short unless it broke below 414. I think on this entry right here, I'd start with a stop right there at around 418.5, so that I'm only risking this much, so I can have a good position size on that move. I wouldn't be offended if you took a wider stop down here at 414. If that breaks, Ken's got it set up so if it breaks the belly or the lower skin of the dragon, second position, I would be adding on a break of the dragon itself. I'd be adding a third position at 409, fourth position here. And really the downside of this thing is down around 390, so that's about an 8%. That's about an 8% drop right there. And that would take you down to these price levels here on the daily. And that would just get you to the edge of the river on the weekly. So this looks like a good one. I think with all the money that we're going to throw at this, finance as a sector should continue to do pretty well. All right, next up is EWZ. And we have, what is this? So yeah, there's the weekly, daily, and hourly setup once more. Extremely volatile on a weekly basis. That's what makes this thing a swing champion, is those long, orderly, multi-week, multi-month moves. I mean, here's a move from 31 to 42. That's a 33% move. And then the swing to the downside, almost the same magnitude. And now it's just starting this move back up. So we're really looking at like an entry around 37. And that makes this this was legit on Wednesday or Thursday or Friday as an SSC with a stop here. But this one, Ken is contemplating a 50-cent risk. I think that's a reasonable place to get short, or you could wait for the violation of 36 with the belly of the RL10. I think I'd be ready to go at 36.50. And then your target would be down here at 34.50 inside this congestion zone. So you're looking to capture $1.50 pretty quick. And so if you're short at 36.50 with a 50-cent stop, it's the yellow box. And if you add short at 36.50, that's really $2 against a 50-cent risk. So that's 4-to-1 on the downside. And then the upside, it should be able to get through. If it's going to make a move, it has to get through this. So I'll call that at 37.50 is where that starts, and 38 is where it clears. So it has to get through that resistance. So you're authorized to get one long there. I would wait for this for my second one. Let me see it get through all of this, because then your next resistance is here around 39. Then the top of the dragon and the top of the RL10 all up around 40. So this one should go fast. It has to get through resistance. Then this should go fast, and then that should go fast. This is not much resistance at all. So if you had two positions long from 38, you'd be able to really capture those moves pretty nicely. And then 40 looks like this. It looks like fair value on the daily. And then that's the next big resistance, because that's the RL10, and that's the RL10 where it rolled over twice, gave you that big fail. So if this works and then starts failing in here, it's supposed to, that's what you would expect it to do. And now you want to preserve all of those gains. Like, you don't want to sit and hold all of this a second leg down. So get well started, lock in your gains, get a second position around 38, and then it should test at 40 to find out what if it's going to continue to go. And then if it does go, getting up into this region here, 40, call it to 41, that should be the next big leg. And by then you'd have three positions well in the money. So this looks like a good one in both directions again. Nice frame. All right, next one up is U.S. Steel. And much like Alcoa, we're noticing the big, strong weekly surges. Yeah, we're noticing the movements on the RL10, what a nice swing pattern this makes. And now we are back testing that weekly high around 28-ish. And so that's this 28, 29. This was the 29 up in here. And the 28 was this resistance level, peak of the RL10. So if it breaks through here, it's leaving behind all of this resistance. And so you're risking about 80 cents. And you have to see it get above 2680, the peak of the dragon, and then the peak of the RL10. And then if it gets above 2950, this should be well postured to go. So 2950 is the price level we should be able to get to before it becomes difficult. All right, so that's 1.5. That's $1.50 from 28 to 29.50, and we're looking at risk getting 0.75. So that's 2 to 1 to the upside. That looks reasonable. I would wait to see, above 29.50 before I put my second position in, because this feels like this area in here failed pretty fast last time. So, and then this was pretty strong resistance right there. The downside of this one is easy to see. You get short once at 27.25, add a second position at 26.50. So now you'd be getting short in this region, and then it gets to 25. This support level should hold, and it gets to 25 and tests. If that fails, you get a third position in, and then you're looking for this 23. And if that fails, a fourth position, and down to 21 it goes. So great. U.S. Steel is a great trender. That would be the unusual play, though, to see that failing with all the money that's coming into the infrastructure. Oops. Let's try that again. Wonder why that's not working. so we want Boeing. There we go. All right. All right, next up is Boeing. Again, weekly, daily, hourly. Nice double bottom here on the daily. The last time that held, it got to 240, 242. So if we call 240 as the upside, and we're wanting to get long around 221, that gives us about $19. And really looking at only about a $3 risk in here. So that's almost, that's 6 to 1 to get up to 240. This gap will be the interesting test. So it gets to 221, you long from 221.75. It gets up into here. And now, is it going to push on through this gap? If it starts to fail in here, cash it. If it gets out of this at about 230, that's where I have the second position, right about there, around 230. And then this gap acts as a buffer. So now you have two positions going into this gap. Now, if it goes through here fast, then that's really a great sign, and you want three positions by about 235. And then it tests at 240. Then if it starts to fail, you cash. So these little gap regions in here, that can either traverse that very fast if the buyers have all the mojo, or it starts pausing as people wonder if it can close that gap. And then if it starts to fail, you cash. Okay. I like the short from right here because there's just very little support at the bottom of the RL10. And then if that fails, it gets down to 212 pretty quick. So that's a pretty good short at 218. So nice frame altogether. We've already seen Alcoa. So we'll go to wonder why that's giving me grief. So Boeing. Let's get them all loaded now. All right, let's take a look at GDLC. The weekly move on this thing has really been extraordinary. It has left behind all of that previous resistance. All that resistance smacked up into here and then failed and came back down the bottom of the stack to 20 and then came up and tested this again. And now we got leg two. So if that's leg one up, this is leg two. 60 feels like an important psychological level, but you wouldn't know that to look at the market. There's no resistance. It cleared resistance at 50, which was this. So that move from 50 to 60 has been staggeringly good. Ken H played this one in a very nice way. I think we missed this, the two kata two entries, but he's looking for a continuation play here on a Z3 breakout from a Z3 pinch with a $4 risk. There's another plus 10 in this thing, easy to believe in, and against a $4 risk, that's 2.5 to 1. So that feels good. The short side is there. Short at 56, first target 51, second target 44. And as volatile as the cryptos are, yeah, that can happen. So that feels like a nice level of risk to be able to manage a $4 risk on the intraday. And I like the upside on this one. All right, next up, Ethereum in the crypto space. This one is also testing a double top right here, around 31. If it can get out of here, then getting up to 40 is well within reach. So there's an $8 upside that we want to capture in this. So if you're long at 31.50 with $1.50 of risk, that's 5 to 1. That's a 5 to 1 ratio to the upside. I like the short here because then you feel like it's coming to those two, either 28.50 or 27.50, leg 1 and leg 2, and then leg 3 on the breakdown. But Ethereum has been really responding well to the hard fork it took in August, and it's we've been calling for a nice move in August, and that's what we got. So I like this on the continuation. You can find, brokers like Coinbase or Robinhood that will allow you to stake your Ethereum at 6 or 7% interest. And it seems to me to be a legitimate alternative to bonds. Don't try that at home, kids. This is not advice, but that's the way I'm reading it. All right, next up is Squarespace, a financial disruptor. This first series over here on the weekly, that was just an unqualified good. And then it's had about, 6 months of just chop. But it seems like it's resolving to the upside. And, 290 is in our sights to the upside. And here's 270. So that's plus 20 on the upside. And you're looking at it from about 270 to 264, a $6 risk versus a $20 upside is about 3 to 1 reward to risk. And your first position. Now, I think you got to watch carefully here about 274. If this starts to fail, I'd be out. I would not let a winning position go negative. But if it gets above 274, and I think you could even wait as long as 275 to add your second position, and then it's just getting into this congestion zone. So the least surprising move would be to take out this high, then get up in here, and then fail somewhere in here short of 286. So anywhere in here, I'd be looking to capture a reasonable gain. But if it got above 286, that's where I'd be looking to add positions, because this has legs, because then it's at all-time highs and breaking out nicely. So this is your tactical gain area. This is kind of your first getting well started area. And then this is a reasonable short side, and second position at 256 is where I'd be. Next up is the triple Qs. Great breakout on the weekly and daily, and you can see that it's leaving behind this resistance area. That was the last leg from 135 to 141. So plus 6 on the leg, and this is just starting. So 143 plus 6 means about 150 to the upside would be reasonable, and that's a Z3 excursion. And every reason to believe that can work. So that would be plus $5 of gain. And this frame is about a $2 risk. So this is about 2.5 to 1 reward to risk on the upside. And that's a nice momentum play. I'd be tempted to take a smaller risk and have twice the size of the position, because if this starts going, then that should never be tested. You don't have to wait for that long. So I think I could be tempted to try about $1 risk instead of a $2 risk. All right, next one up. Advanced micro at the top of a weekly resistance area. So if that breaks out, this should be free and clear to get all the way up to 122. So you're talking about plus $11 to the upside, and maybe a $2 risk. So that's like a 5-to-1 reward. Now I would say this resistance around 118, again, if it breaks up and starts to fail here, I would cash that, but I'd look to add a second position around 118 if I could. I think you could consider a short side trade here about 110 or 109 or 107. So this would be very aggressive right here. And then you're playing just for that short move. This is kind of the middle of the road. Then that would have signaled a failure of that excursion, and you're playing for the far side of the congestion. And then you could play that as a second entry at 107.50. You could either start your position here or add to it there. This would be the most aggressive. So there's 3 levels of aggressiveness on the short side entry. 110, 109, 107.50. And if those break, then this resistance disappears pretty quick, or support disappears, and it gets to 105 in a hurry. And then it could break below 103.50. And that's where you want about 3 positions. Because if this all breaks, then this fades and it's coming down to 96 pretty fast. So that's how you build a short side position there. All right. Let's see. Q's, AMD, Cliff. All right, so this is CLF. Again, you see the broad strength of the weekly move in all the materials, especially the metals. Just upside for days and weeks. And it's pushing north of the dragon already. So this feels really good on the weekly. The daily is battling this kind of yellow zone resistance level. So this first one is a tentative play up to here. If this starts failing, you cash. But if it breaks through, then you could add a second position here. And if it breaks through the all-time high, then that's where you can add a third position. And this sets you up a nice little risk reward ratio. And here it's very favorable. Again, you want to be watching XME, metals and mining, XLB, materials, SLX, the steels. So if the S&P, if SPY is up and XLB is better, and then XME is better still, then you want the best of Alcoa, US Steel, TX, Nucor, or Cliffs Natural Resources. Usually Alcoa and Cliff give you the strongest percentage moves. But as we've seen from the US Steel, that's in a pretty good shape too. The downside trade, the breakdown from there, if you're looking for this, that's certainly tradable, and 2 positions there. Just know that CLF is a meme stock, and it has a lot of retail traders that love it, and it's relatively low volume, so its moves can be pretty sharp. But I like that frame. All right, let's see if we've got everything here. Q's theorem. I think I missed XOP. Yeah, it was the one I missed. All right, XOP is in great shape. You see, Ken H had a nice swing trade here, just in the usual way. He had framed the trade as an SSC. It gapped up, so he bought it on the strength, and then leg up and started to. It failed right where you would expect it to fail, as it was entering the resistance zone. That's where it started to fail. So he cashed it on the RLXD. Now, this was possible as a re-entry here at 81.5 when it took out the peak of the RL10. But if you didn't get that one, now what you're getting is a continuation entry at 84, which has now cleared that resistance zone. That resistance zone caused it to fail last time. It made it fail this time, but now you've cleared it from Friday's action. So now you can think about getting long at 84. And as you can see, the next resistance zone is up here around 93. So that's +9. And you're only looking at that's about a $3 risk. So that's 3 to 1. And then if it gets through there, the next resistance is up here by the peak of the RL10 twice, around 99. And that's another $6. So there's potentially $15 of gains inside here before you hit the real strong resistance. And so we'll be watching, XLE, because XOP is like a leveraged XLE. This is the big S&P sector for energy. And this is oil and gas exploration. So if XLE is good, then XOP could be even better. And that's potentially $15. Okay. All right. That's everything we got for tonight. We'll get this published and posted in the usual spot. Thanks for your kind attention.